Hello and welcome to Moneycontrol's live stream. You're watching Closing Bell with me, Lovisha, Darad, and my colleague Nandita, Khemka. Well, what a day for markets. It took a surprising turn of events in the last hour of the trading session, with Sensex and Nifty notching new fresh time all-time highs, taking a turn and posting about fifth day of consecutive gains. Nandita, today's the market texture has completely changed. We saw an initial blip, initial downturn in the initial sessions, but then completely surprising turn of events, and we saw a completely reversal on the counters. What do you make of it? What do you make of the texture of the markets
That's
today?
correct. That's correct, Lovisha. It was turning out to be a fairly boring day for the market, right? We were meandering below that, 25,000, in fact, 26,000 mark. We were around that 25,900 mark. It was an iffy start, but there was a sudden burst of excitement in the last half an hour of trade. We saw a sudden reversal. The Nifty, in fact, not just reclaimed the 26,000 mark, but it hit a fresh high of 26,032 as well. Although we've shut shop above that 26,000 mark for the first time, but technical analysts believe that there has to be a decisive close above 26,000 for the Nifty to in fact hit levels of 26,200 or 250 on the upside, which mind you would be the next key resistance level to watch out for. But it wasn't such a great day for the broader end of the markets. The Nifty mid cap index was down somewhere around 1% or thereabouts. Small cap index as well down 0.5% or so. And if you look at the market breadth, you'll see the weakness there. The advance decline ratio was at 2:3. It was in favor of losers today. But what really led to the change in the texture of the market should be the kind of recovery that we saw on the Nifty bank index. It had an iffy start. It was splitting between gains and losses in the morning. But in the second half of the session, it staged an over 300-point recovery from the day's low. And not surprising that one of the most active stocks today was HDFC Bank, which of course has been holding out above that 1750 level. It was fairly range bound between 1700 to 1650 or so. But once it crossed that 1700, 750 mark, it has been able to maintain those levels, and that's a good news for the Nifty Bank Index. Among the other movers today, metals extended their gains. Pharma, realty were among the other gainers, but what didn't do well was IT, which mind you saw a very good recovery in the last few hours of trade yesterday. But today once again we saw it succumb to profit booking or some bit of weakness. Consumer names were also not doing well, and so was the PSU banking lot that was under pressure. But Lovisha, let's take a look at some of the individual movers then. IT stocks continue to dominate the losers list after a day-long break.
Yes, absolutely. IT stocks have again taken knock. Yesterday we saw a little bit of recovery in the second half of the trading session with the IT stocks, but today again they have taken knock off, and IT stocks are once again dominating the Nifty 50 losers charts. Among the individual stocks, we have seen LTI, Mindtree and Tech Mahindra among as the top Nifty 50 losers. But if we look at the top Nifty 50 gainers, what actually lifted the sentiment was power plays. Power plays like Power Grid and NTPC was some of the top movers of the day. This comes amid the India's call for the transition to green energy as well, and the electrification calls that have been dialed up on the street. Another one of the gainers were Axis Bank in Nifty 50 index. Also as well contributed to the mover was Bajaj Finserv. But yes, among the Nifty 500 gainers and losers, we can see that Z Media has been one of the top performers of the day in the Nifty Media Index. What stood out for Z Media was that later in this week they will be focusing on a fundraising plan to meet their capital requirements as well. So that was the major market texture of today. And of course, we can see some other sectors also taking, Nifty Metal Index, like you rightly mentioned, it built on to yesterday's gains as well. We saw a little bit of pop-up in the initial session by 1% or so, but later off in the second half of the session, it cooled off and, ended up with about a 0.4% of gains. But other than that, we can see that, Nifty Auto Index also started the day with quite a good positive note, and it hit an all-time high in today's trading session. But towards the end of the session, we saw that the gains mostly fizzled out, and it ended with about 0.1% gain. So yes, some of them did do in the initial start of the markets, but mostly of them that they actually fizzled out gains in the second half of the trading session. So that is all coming in for today's market texture. But some of the individual gainers and losers, let's take a look. First up could be HDFC Bank. HDFC Bank has been doing quite well, one of the active contributors in the Nifty 50 index. Let's look at the charts first, that how HDFC Bank performed. It gained about 0.5% after HSBC upgraded the stock's target price to about 2010 rupees, and it reiterated a buy call on the counter. So this HSBC's upgrade comes amid that the brokerage firm indicates that the lender plans to sell about 3% of their loans in order to bring down their credit to deposit ratio. In the past couple of quarters, we have seen that majority of the lenders have been embattling higher credit to deposit ratio. And here HDFC Bank particularly reported about 104% of the credit to deposit ratio, which is ideally higher than 80 to 90% for majority of the banks. Though there is no prescribed norms for RBI set for CD ratio, but usually this range is preferred by most of the lenders to set out for their CD ratio. The management has also set out in their June quarter conference call that they intend to bring down their high CD ratio to normal levels. But let's see how the trajectory pans out. But right now, reports have indicated that HDFC plans to sell about 60 to 70,000 crore rupees worth of loan assets, which also includes 9,000 crore rupees worth of car loans. If we look at on the charts, the YTD performance, it has still underperformed benchmarks, and it has risen about just about a tad bit of 4% due to merger snags, slower deposit growth, and subdued quarterly performance that we saw in June, as well as margin pressure due to higher cost of funds. So plenty of headwinds right now, but we will see whether or not HDFC in the coming days it would see some reprieve or not. That is coming in from the HDFC.
That's correct. Of course, that's correct, Lovisha. Of course, who knows that this could just be the turning point for HDFC Bank that the street may have been waiting for. As I mentioned, it has broken above key levels of 1700 and 1750. And of course, the target prices outlined by some of the brokerages are higher or in excess of 2,000. So who knows, this could be just the reversal of the underperformance that the stock has seen ever since its merger. But on that note, let's take a look at one of the stocks from the FMCG basket that was under pressure today, Darad, over 4% lower on this counter, given the fact that there has been a downgrade on this stock from UBS. They have downgraded the stock to neutral, but the target price has been raised to somewhere around 700 rupees a share, which implies a potential 7% upside to where the stock was yesterday. Of course, UBS has said that the downside risk is rising for the counter, given the fact that all the chatter around rural demand recovery, of course, there are signs of rural demand recovery, which some of these companies also pointed out during their quarterly numbers. But all the good news around that has largely been priced in. That's what UBS has said. And even valuations wise, even though FMCG stocks are traditionally, high PE stocks, but still the valuations are even more stretched now, given the fact that it is currently close to over 2 standard deviation above its 5-year mean, currently trading at a PE multiple of 60.3x, higher than 5-year average PE of 54 times. Now, UBS has highlighted the potential sales risks to its real juices in India. Now, there's been rising competition in the carbonated cola drink space. Soft drink players, right? And there's been an ongoing price war as well. And this is something that could hurt sales for Darad. And real juices actually form somewhere around 9 to 10% of consolidated sales for Darad in FY24. Additionally, there's heightened competition in another segment, in the coconut oil segment, after the entry of Bajaj Consumer. Now, coconut oil forms somewhere around 2 to 3% of consolidated sales of Darad in FY24. Although the brokerage has pointed out that other segments are doing pretty well, and in terms of demand, because we are of course on the threshold of festive season, right? So risks are limited due to strong demand, or likely strong demand in the upcoming festive season. But UBS has cut the FY25 EPS for Darad by 11%, and the factors that it has mentioned behind this move is lower FY25 beverage sales as well as limited margin expansion in this financial year. Looking at the stock performance, the stock is up 12% on a YTD basis, but from 4th June onwards, since the FMCG underperformance kind of reversed, we saw the stock gain somewhere around 14% or so. There are concerns about sales regarding 2 of its segments, but we'll have to see how it really pans out, because there's intense competition playing out here. although the green shoots in terms of rural demand and festive demand, of course, these factors seem to be already priced in. So we'll have to see how really the trajectory pans out. Also, a lot will depend on how the quarterly performance for the second quarter really pans out for Dabur. Lovisha.
Yes,
Lovisha?
Nandita, you rightly pointed out, but that Moneycontrol also had a recent interaction with the management, and the Dabur management has said that the real juice Diwali gift packs also they're going to plan to roll out between October to December, and since it's a high demand during the festive seasons, so they expect certain pickup to happen during that point of time. And it's true that there's certain signs of rural growth as well, as the company has indicated, and they also said that they will be tapping into the quick commerce and other new age business drivers to enhance their reach more effectively. But yes, that's true. Let's watch out on how Dabur actually pans out. Today it actually saw quite a batter in the trade, but let's see how it pans out in the upcoming sessions. Okay, so coming to next stock, we will be talking about Power Grid, because Power Grid was one of the top Nifty gainers in the trade and has also hit a new record high of 366 rupees after a bag and order to establish an interstate transmission system in Khavda village of Gujarat. So now this project involves installation of SATCOMs at Khavda Pooling Station 1 and 3 along with associated base extension work in boot bases. Last week also, the company won another bid to establish transmission system in the same area. Following this announcement, Goldman Sachs today morning has come out with a report saying a buy rating for the counter and has shared a target price of about 370 rupees. Now, analysts at Goldman believe that the company's transformative capacity is set to grow at 8% compounded annual growth rate as government upgrades its transmission capex to $110 billion. Yesterday also, we saw Motilal Oswal initiating a buy coverage on majority of the power plays, and they also set a buy call for Power Grid and set out a higher target price compared to Goldman at 470 rupees per share. So even Motilal Oswal expects that Power Grid's bullish momentum is expected to continue in the near term, backed by rising power demand, transition to cleaner sources of energy, and of course upgradation of the current electrification infrastructure. So, if you look at the YTD charts as well, Power Grid has been doing quite well. It has risen about over 50% in trade so far this year. So, that is coming in from Dabur. Nandita, what else do you have on the stocks to radar today evening?
Right, that was all about the power stocks and how they are powering ahead. But from power, let's shift focus to one of the stocks that was in focus today, in fact dropped to a 52-week low. Ease My Trip rather. The stock dropped to a 52-week low, as I mentioned, after promoters, stake sale of somewhere around 3% or so. Earlier yesterday, sources had indicated that the company's promoter Nishant Pitti was looking to sell up to 8.5% of his stake in the company via block deals with an estimated size of 622 crore rupees. Mind you, at the end of June quarter, Pitti held somewhere around 28.1% stake in the Easytrip planners. So, the quantum of stake sale has been much lower than what was being expected, right? But, if you look at what the company has been doing today, of course, it came under intense selling pressure. But the company has been taking quite a few strategic initiatives in the recent past. Taking you through some of them, it has recently ventured into medical tourism industry with its board approving the acquisition of a 30% stake in Rollins International for 60 crore rupees and a 49% stake in P-Fledge Home Healthcare Center for about 30 crore rupees. Now, earlier this month, the company has also announced its plans to foray into EV manufacturing, wherein its board has approved the proposal to incorporate a wholly owned unit to manufacture electric buses. But the same, of course, is subject to the approvals from Ministry of Corporate Affairs. Now, the company also announced a strategic partnership with the public sector bank, Bank of Baroda, to launch a co-branded travel debit card aimed at frequent travelers. Now, this debit card is designed to cater to frequent travelers and entertainment and lifestyle enthusiasts as well. In fact, this is the first co-branded travel debit card to be launched by a public sector bank. So, the card in fact offers a combination of attractive discounts, offers on travel and hotel stays, complimentary annual membership of OTT streaming platforms along with vouchers and discounts on popular e-commerce sites, and all the other things actually aimed at setting a new benchmark in customer satisfaction. Last month, the company's co-founder Prashant Pitti told CNBC TV 18 that the company is actually planning to prioritize its or continue to prioritize profit growth with a stronger focus on expanding into non-air travel services and international markets as well. But despite these positive developments, Easytrip's shares have seen continued downward pressure. They have been in a downward spiral, reflecting the cautious sentiment in the market, and today of course hit a fresh 52-week low in the wake of promoter stake sale. Now, given the fact that the promoter stake sale is much lesser than what the street was anticipating, looks like this promoter stake sale could be an overhang for the stock in the near future as well. Analysts are also maintaining that even though the stock has seen quite a lot of battering, if you look at the monthly charts, 6-month charts, 1-year charts, it has been weak, right? But even then, analysts maintain that valuations wise, the stock is still looking a little expensive. However, the recent strategic moves that the company has taken could actually bode well for the company going forward. But for now, as I mentioned, there could be a few overhang or some bit of overhang because of this promoter stake sale going forward. Stuck in a downtrend, Easytrip. But let's see how these new initiatives that the company has taken over the last few months really bode for the stock or for the company per se going forward. But I think on that note, we've come to the end of this edition of Closing Bell. Of course, leaving the day or ending the day on a very happy note. It's a record close for the market once again, 26,000. We've shut shop above that milestone today, and let's see tomorrow if we can build on that. And if we manage to end even higher than that, then who knows, 26,200 could be on the cards next, and one level to really watch out for. But with that, thanks a lot for tuning in from me and Lovisha. Have a great evening and come back and join us tomorrow morning once again at 9 a.m. on Opening Bell, where we get you all the stocks in focus, and of course, we get you solutions to any queries that you may have with respect to your stock holdings as well. Have a great evening.